Hey everyone, welcome to the first episode of Facts and FAQs. This is a new segment I put together to talk about facts and insights, as well as respond to frequently asked questions when it comes to property investment. My name's Kej Kulane. I've been investing in property for over 10 years now, and a mission of mine to help uplift people's wealth consciousness and also show people how to use property as a vehicle to help improve their wealth. I guess this being the first episode, there have obviously not going to be any questions that have come in, but I wanted to center it around a question that I get asked almost on a daily basis from clients, as well as a common topic that comes up between friends and family, and that is the property market unaffordable? To start off with, I think I want to say that it's probably not the right question. Firstly, I think there's multiple markets in Australia, and property is being purchased by a portion of the market, and so whatever these prices are, people are buying it, so it is affordable to some. I think the question really stems around though is it affordable for first home buyers and people trying to enter the market, is I think where the question is coming from. So what I'm going to do in today's episode is break down some of the data around that to show what's kind of happening out there, and then also go through some options about maybe what people can do to get into the market if it is getting a little bit harder as well. So what I wanted to do firstly is show a trend of what is happening with home ownership based on age brackets and age groups. So what this shows is based on the cohort you are born and at a given age, what percentage of that population own a property. So to give an example of how this graph works, if you look at this cohort here of people born between 1947 and 1951, at the age of 30 to 34, almost 70% of people owned a property. When you're comparing that to the cohort born between 1982 and 1986, that number is now just under 50%. And what is scary, a little bit scary, is that those born between 1987 and 1981 are coming out of the blocks quite slowly here as well, with about 37% ownership at the bracket of 25 to 29. So this is an indication that as the generations go on, as much as there can be other factors that can affect this, but a large portion of this is being caused by lack of affordability, lack of ability to get a deposit to get into the market. So what this is now showing is average price of a dwelling. This graph is showing here capitals and regionals and at the rate they've been increasing over time. And this line here is showing wage growth. So you can see here that property prices have been growing out of sync with wages, because you would think as wages grow, property should be growing in line with that. So what is causing this price growth, even though wage growth hasn't increased in proportion with that? A couple of reasons. So one, I want to show you. So there's people out there that are coming into the market with deposits outside of wages. So number one, this is showing here migration of millionaires. And you can see here that in 2022, Australia, outside of the UAE, had the highest amount of millionaires, net millionaires, move into the country. So if you're having people with large amounts of wealth coming into the country and looking for places to live, they don't necessarily need the extra wage growth, anything like that, to save up the deposit. They're coming in with the money and putting that into the market. And an indication here, you can see about 80,000 millionaires have moved to Australia over the last 2 decades as well. So once again, I guess without reference to what's happened elsewhere, it doesn't really mean much, but ultimately it's quite a large number. And these people bringing wealth into the country is a large contributor to why it is a little bit harder for other people to get into the market. Ultimately, what this does show though is that Australia is a young country, it's a desirable country to live in, and this is something that is likely to continue. And moving next now. So something else that has been happening and is going to be happening in a big way, is what we're terming the inheritance boom. So this is, you might have heard this term, old money. Old money just means generational wealth. This has been big topics in US and things like that, where there's been inequality because of the ability of people that have owned property a long time ago, and that's passed on from generations, and it makes it easier, and then it's harder for a lot of other people to get into that market. So in 2018, Australians passed on a total $120 billion worth of inheritance. And so on average, that was about $125,000 per recipient. So over the last 20 years, that amount has doubled. And the forecast for 2050 is that's going to increase by 400%. So 4 times that number. So people that have had wealth for a long time and then passing that on to the next generation, so therefore they're not needing to save as much deposit to get into the market, and they can get in sooner and lifting the property prices up. And so then we're starting to see a bit of a wealth divide form between those of owned property versus the ones that haven't. And a lot of this wealth, when you actually dive into the data a little bit deeper, it's 60% generated by property as opposed to anything else. So that is one of the biggest drivers of wealth, and one of the biggest disparities of wealth inequality in the country as well. So now with an aging population and a lot of these baby boomers heading into that age bracket where, you know, they're going to come to that point where they will pass on, and the current generation with much lower fertility rates and much, I guess that's going to mean that there's going to be a lot more wealth per person going in there, and that will then be put back into the market. Once again, going to make it harder for people that don't have that support to get in there. So with Australia being such a young country with vast amounts of migration coming in, and on top of that, as we talked about, millionaire migration, inheritance boom, it's very hard to see the property market slowing down, and it's hard to see it's not going to be unaffordable for this portion of the market. So once again, that disparity is going to start increasing more and more. So it is important, I guess, if we're looking after ourselves, to find a way to get into places that are going to keep serving us long term, so we don't get left behind. So just talking about what are some of the influences that affect property prices, and I'm going to talk about this in relation to the topic we're speaking about today. So one is interest rates. Really though, when people are saying interest rates, it's access to money. So interest rates go up, people's borrowing capacities do start to come down. But remember that a large percentage of this population, this doesn't matter if they're inheriting large amounts of upfront cash to be able to dump into property, then the effect for that portion of the group won't be as large. Where we are going to see in the short term some effects of that interest rate, it's going to be people that have, I guess, not generational wealth, some of these new areas that have come up and people have leveraged to the max, and everyone in that area is in that position. We may see some softening because there's not a lot of generational wealth in those locations. But on a macro level, when you kind of look at it as a whole, it's hard to see that slowing down. Another big one is politics. So politics and policies have a really big influence on the property market. Things like negative gearing, land tax rules, foreign investment rules, and all those kinds of things. And once again, with there still being a much larger percentage of people that own property versus ones that don't, it's going to be hard for any politician to come in and make policy changes on this that I guess is going to affect property owners. So once again, don't foresee anything in the near future of anything significant that is going to slow down what is happening, as much as there's been murmurs of some land tax changes and some other minor little policies out there that make it a tiny bit harder for investors compared to own occupiers, but not enough that's going to stifle this long-term growth. You've got then population and supply. So you need to look at these hand in hand, because it's the amount of population coming in and then the amount of supply that is then available in the market. And right now there's been policies out there to ease the amount of restrictions on bringing migrants in and lifting the amount of skilled migrants coming into the country. And what is a little bit scary is that there is one of the lowest amounts of new supply coming to the market at the moment due to increased construction costs, labor shortages, etc., etc. So once again, going to put a lot of pressure on prices to go up. This is something I put together based on I used Melbourne as an example, but this is telling a story of what's kind of going on across the country. So this top graph here is showing vacancy rates. We're almost nearing all-time lows, and as this trend is going to continue, we're going to be there very, very quickly. So there's even for renters, a really, really short supply of stock available in the market to get into. And now we're about to have this influx of migration coming in. And really the scary part, which is not getting as much attention as it deserves, is the amount of new construction coming in. So here, it's not super clear here, but that's 2013 and that's 22. And this is talking specifically about apartments. Once again, if we extrapolate it out to other types of dwellings, very similar story. So these are apartment launches. So we're at record lows of only 4,100 new apartment launches in 2002. And for apartment commencements, once again, all-time low, we're looking at 5,000, can't read that number clearly, but I think it's 5,900 there as well. So this is the way the line is going. And with, once again, the challenges out there of getting new stock to the market, and that is going to pose a real problem on rents going up and pressure on prices as well as the next thing that's going to get affected. So what do you do? If you're not in a position where you've got the generational help or not as significant of the generational help, then we need to think about what do we do. I guess one thing I would definitely recommend not doing is, depending on your situation, of course, is just sit there and try and just keep saving and saving and saving. Just because for the average person out there, the rate that you can save a bigger deposit, generally speaking, the market is probably going to be moving at a pace outside of that. So get into a position where you can get enough deposit to get your foot in the door. If you're looking for a place to live, I guess think back at maybe some of the previous migrants or previous generations that have come into the country, and they didn't necessarily go and live where they wanted to, or that were areas that were highly desirable. They had to go into areas that were defined as more lower socioeconomic or up and coming areas, which are highly desirable now, and started in those markets and got their foot in the door. And that's been a huge stepping stone to help them moving forward. I can share a very similar story, and that was my parents' story. Went and rented and bought and stuff in places that weren't as desirable as areas they'd wanted to be in, but that stepping stone has now enabled them to provide a better life for us, and given me the stepping stone to be able to go out with a bit more freedom. But I guess when it comes to lifestyle, what I'm trying to say is, if you are lifestyle conscious and you really want to stay in this location because that's what's more important to you, then what you can do is rent where you are and then put your money in affordable areas out there where you can invest. Because I guess what I'm saying here is there are still a lot of markets in Australia that are still affordable. They may be outside your back door, might be in a different state, might be on the fringe suburbs of where you are. And there's an opportunity to get in those markets which are still growing. And this would give you a huge leg up in the future when you are either looking to buy your own home or for wealth for whatever else that may be. Now, the other one I do want to say, because it happens a little bit more than you think, is that even though parents do have some sort of property or some wealth created out there, I think sometimes people are a little bit too proud to ask for support. I get a lot of people that say, I just want to do it by myself. I want to do it on my own. And look, all power to you and respect. But I guess what I'm trying to say is out there are other options out there which may not put a huge strain on, I guess, the previous generation. Options like things like a guarantor. I won't sit here today and break down exactly what that means, but not a huge level of risk to the person going out there, and it gives you a huge leg up. And if possible, then even deposit help will go a long way. But definitely would explore that guarantor option, because the hardest part, generally speaking, is saving up that deposit. So if there's a way to get that deposit covered, then it's a good way to get into that market. And then think long term. When you are buying this property or this investment, you want to be getting into locations that are going to have long-term fundamentals. Not always this, but generally speaking, capital cities with strong infrastructure, employment opportunities, and looking at those things we mentioned before about lack of supply. And I think going into there is hard to go wrong when you're kind of looking at some of those fundamentals. And yeah, in future episodes, I'll break down some of that information in a little bit more detail. And yeah, you're going to be in a much stronger position. I guess that's all I really wanted to kind of cover today. The main takeaway is that this is happening and is likely to keep happening. Just be mindful of waiting on the sidelines based on what you're seeing in the news and the headlines. Do what you need to do to make a plan and get your foot through the door, because give it 10 years time, 5, 10, 15 years time, you're going to be very thankful for the decision that you've made. All right. Have a good one and see you in the next one.